All three were in sync this week. The S&P reached 6512. The Dow crossed the symbolic 46,000 for the first time, gaining 617 points in a single session. And the tech-heavy NASDAQ also notched new highs, extending its winning streak to 5 days. We are pleased with the strength of this September. Notably, only about 25% of the S&P 500 stocks finished Friday in positive territory. The major indices still posted solid gains. S&P up 1.6%, NASDAQ up 2%, and the Dow advanced 1.1%, posting its first weekly gain in 3 sessions. The week's rally was driven by a combination of factors, including cooler than expected producer price data. Now that's good because that means inflation is lower, and that should help us with the Fed's the Magnificent Seven stocks: Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla surpassing $20 trillion for the first time, a staggering amount that exceeds the GDP of all nations on the planet except the United States. So some of the highlights: inflation and economic data. Healthcare and utilities showed strength, while energy stocks benefited from oil price rallies following the UK sanctions on Russian crude oil. This was a positive for me. This rotation reflects growing investor caution about valuations in high-flying tech stocks. All right, so let's look ahead. As we head deeper into September, the market faces its most statistically challenging period of the year. The second half of September, historically from 1950, has been the worst performing. You can go all the way back to 1928, and the September last 2 weeks has averaged a 1.2% decline for the S&P, making it the only month with consistently negative average returns. The month has posted negative returns 55% of the time. The decision comes as Fed Chairman Powell attempts to balance persistent inflation pressure against clear signs of labor market weakening. The next few weeks will be critical in determining whether 2025 can buck September's historical weakness and succumb to the pattern, or if September can charge ahead, leading the way to what is traditionally the strongest quarter of the year, the fourth quarter of October, November, and December. This is a wrap for this week.